Hey guys, welcome back to Smart Trader. This is Diaspol and thank you so much for all your love and all your support. And if you're a new viewer, then check out our channel. And if you're liking it, then hit that subscribe button to be part of this big family. In this particular video, we are going to learn about price action trading. So if you know a little bit of candlestick, if you know a little bit of trend line, support and resistance, and if you're still wondering how to trade in price action, how to do price action trading, then this particular video is for you. Even for the beginners who don't even know anything ABCD of price action trading, this video is for you because I'm going to go step by step from the beginner's point of view. So I'll be having a lot of topics. So if you know certain topics, you can skip that, or if you don't know such topics, you can revisit the topics again and again. So the contents what I'm going to discuss in this particular video is I have few points. That is, first of all, we'll discuss what is price action because we're going to start off with price action. So then how to trade in price action, then important concepts like support and resistance concept, and then candlestick pattern concept, demand and supply concept, target placing concept, and stop loss concept. These are the few concepts which I will be discussing in this part 1, and based on this I will do a part 2 with another details. I think this is more than enough for part 1. Slowly we'll do part 2 with many other details of price actions. So this is from a beginner point of view. We'll go step by step. In-depth details we will do more videos later. So without wasting time, let's start off with what is exactly price action. So I will explain things in my style in a very simple way. I will try to explain to most of people who don't know about trading or about price action. So I will explain in very simple examples. So you would have seen a lot of movies. So if you ask me what is price action, I'm giving you an example. So if you've seen a lot of movies, when I say movies, it can be action movies. So different action movies have a different story, okay, a different style of action, okay, Matrix or maybe some sword fight or gun fight. So different actions are there in different movies, so it will tell a different story. Same way the price, okay, in this case the movies and the heroes are doing the action which has a different story. Here the price is the hero which has a different action. He goes up and he goes down, he goes up, down, sideways, up, sideways, up, down. So he is creating a story, his own story. So the price is moving, he's creating an action, and this has a different story. So these actions can create a story, okay. So that is what we are going to learn in price actions, as simple as that. So every price action has a story. So we will try to understand what is the story of this price action and what is the reaction we can do with these price action. So now the general question will be how to trade these price action, right? So how to trade this price action? I told you every price action has a story to it. So how do we trade to this price action, and can we really take advantage of it? So before to that, I would like to give an example of signal. So most of you guys, I know most of you guys would have been driving or riding a bike. So you would have seen the traffic signal. So let's say in red, you know that it is you need to stop, or in the green, you know you need to go. So in case, imagine in case you don't know these rules and you take a car or a bike on the road, what's going to happen? So basically you will go opposite, you'll jump the signal, or you'll come in a wrong way, or you will make a traffic jam and you'll make a big problem and you will be fined by the police and you make a lot of loss and all those stuff. So understanding the signal, what will happen? So understanding the signal like others, you will learn when to stop your vehicle, when to go along with the crowd. So what will happen? You will not create any traffic. You will have a peace of mind. You will not make nuisance in the road. So everything is going smooth and cool. So that understanding this helped you to understand what everyone will do. So this type of signal is what you will get in price action. Let's say I have drawn two trend lines, okay, later we'll talk about trend lines and all that. I've drawn two trend lines which says this is the resistance zone of this nifty chart, and these are the support of this nifty chart, okay. So if you don't understand this, you will not even understand why stock is going up and down. But understanding along like how your traffic signal you understood, if you understand that others are looking to buy here near the support zone because it's not breaking, now next rally is here, or people are looking to short in this resistance zone, okay, selling, people are trying to short the stock or nifty near the resistance zone. If you understand this, just like how you understood the signal, even you will be able to do smooth trading in terms of price actions. When you don't understand, when everyone is selling here, you will try to buy, and that's when you go into loss. So basically, if you understand this and if you understand this, you will drive well, same way you will trade well. So as simple as that. So you need to understand what others rules have been created by others, and all are following the rules. People are following the support and resistance rule. Basically, people are trying to buy here or people are trying to sell in the peak, right? So if you try to understand what the crowd is doing, if you try to understand, okay, so this price action or the chart what you see will give you the market situation, what's happening in the market. It has reached the down, reached the peak point. So understanding this first thing will help you to do trading. So by understanding this, will I make a lot of money? And just as simple as that, just buy here, sell here, buy here, sell here. Will I make a lot of money? See, that's a wrong assumption. Price action will tell you the current situation of the market, just like signal is telling you, wait, don't go, now go. Same way, this will tell you a story that go, don't go right now. Okay, so that doesn't mean that you will be successful. If you don't take exact steps at different stages, then you will not be successful, because this will only give you signal. Okay, it's a highlight. Market is at this situation, you have to take the advantage. If you don't take advantage, because there are so many price action traders out there, they will also enter with you, they will exit before you, they'll be more clever than you. If you don't be smarter than them, then you may end up in loss. So there are many other factors also, but in a simple way, price action will tell you the market situation, what you have to do and what normally generally people do, so that you can follow along the trend. All right, so coming to the main concept, support and resistance. All your price action, everything, most of the thing revolves around these concepts, the support and resistance concept. Okay, now in support and resistance concept, see, stock price won't go just like this upside, or it will not just go down. It goes up and down, either like this or like this, depending on the demand and supply and all that. So if you see this rough example, a diagram here, the price is moving and it is taking a support here, right? So it is taking support down and resistance is always in the top. So it is touching here, coming in, it's breaking out the resistance here. Slowly, once it breaks out the resistance line becomes your support now. So resistance, support, which is from the resistance. Now this is your support line and new resistance has been formed, so that your prices take the support here. Okay, this is one example. So we can draw lines, okay, trend lines you can draw. Like this example you see, I just touched these points and drew a line, because maximum area is touching these lines. So if maximum area is touching these lines, this becomes a strong support for me, this becomes a strong resistance for me. So this is how you draw your trend lines to create your support and resistance. The maximum number of points it is touching, that line becomes more stronger support. Now this is a stronger support, this is a stronger resistance according to me. Now different people have different drawing. Few people will touch the close price of the candle, few people will touch the high point of the candle. Now that's a buffer value, but still I'm just giving a rough example. This can become your support, the lower level, the upper level becomes your resistance. Now you see there is a breakout happening here. So let's say you are a trader who doesn't want to take risks, so you're waiting for a breakout. Finally there was a breakout here, so you wanted to buy your shares over here, so you did a buy only when it broke out. Okay, if it was breaking out the, let's say, the support, you would have done a sell, but it broke out the resistance. Now you are going to buy this particular share. So this resistance and support will help you to understand these are the points where I can either sell, okay, these are sell, or if it is breaking with good volume, then I can consider a buy, because large number of people are thinking in this way. It's a psychology of large crowd, large traders, price action traders. So you need to understand this behavior, learn to draw support and resistance of a stock based on the chart what you see. In price action, short-term trading is more effective. So on a higher time frame, price action is more effective rather than you going on 1 minute, 5 minutes chart. Let's say you're drawing on 1 day or 1 week chart. The price action will be more stronger. The resistance zone and support zones will be more stronger, and a lot of people will follow those. So it will be more successful for you guys. When you practice, you will realize that. So start understanding the support and resistance, start drawing lines to understand which is a support. Support and resistance doesn't mean it should be always slanting, it can be like this also. There are times when the stock will touch like this and you need to wait for a breakout, so you may buy here. All right, so support and resistance is basically touching points. Your lower level becomes support and resistance become higher, and whenever this breaks, this one becomes your support. Remember that. Okay, so support is always lower side and the resistance is over the higher side. Now what is this demand and supply concept? Now this demand and supply concept is similar to your support and resistance, because you saw the price going like this. Why did the price go up there and why did the price go down here? I'll give you a simple example. Let's say you would have seen onions, right? So you know the demand and supply concept you would have learned in your school or colleges. You would have learned that when the demand goes up, the supply is down, and supply goes down, the demand goes up, and all that. It's vice versa concept, right? So let's say the onions you would have seen when let's say the onion production is so much, too much of cultivation has happened, too much of onions is there, the supply is too much, the prices will fall, right? The price will fall, the demand will fall. But let's say due to some rain, onions got spoiled and very less supply of onions, the demand goes higher, the price went to 100 rupees for example, right? So the price goes higher because supply is so less, there are so many buyers want onions, but the supply is so less, so the prices go higher. Okay, same way the other example was too much of supply you're doing, but the buyers are very less, the demand is very less, the prices will fall. Same concept I have written here. So the more the demand, the price will go up. So the more the buyers, the stock price will go up. The more the supply sellers, many people are there to sell the onions, right? So many sellers are there, so many sellers, the price will go down. So if I just connect this to my support and resistance, see, I would say at this area, okay, here the supply is so much, the sellers are more, there is no buyers. Gradually it started falling, the price started falling, and later at this stage the demand increased, the buyers increases, and the prices are going up. Your supply is less. Okay, so the demand and supply will help the stock to go up and down, the prices to increase or decrease. And with this increase and decrease, what we will do, we will draw a line and then we will try to create support and resistance. With this support and resistance, we will realize what other traders are thinking, where is the area of breakout, should I take advantage with them, and many other factors will come. So this is how your price actions can happen, and this is how you will understand what's happening in price action. And now what step you take matters. Okay, just by reading a price action doesn't matter, what step and action you take matters in price action trading. Another concept used in price action trading is candlestick patterns, very important ones. Okay, again I told you different price actions will have different stories, so the candlestick patterns will tell you different stories. So people have created certain meaning to it, and then reaction, what happens next, also they have predicted, and most of the people, when we follow this, it becomes successful. There are so many candlestick patterns. Few of them I have already discussed. For example, this is head and shoulders, and this is the double top. So in head and shoulder, basically you see a head over here. Okay, this is a resistance point, this is a resistance, and this is the resistance point. Okay, this acts like our shoulder and this acts like our head, and the point, the support line, you see here the price went up, taking a support. So this support becomes our neckline, right? So this is going to be neckline. So this is what people have named it, the traders have named it, and many follow it. So what is the assumption? The assumption is that if it breaks this neckline, then I will go for a short. How much will I go? From this point to this point, let's say 5 rupees, it has gone up, the resistance to the neckline. So I will try to go for a breakout of 5 rupees. I will go for a 5 rupees target here. This is one assumption. Let's say for this is double top basically. So this is one top and two, we call it double top. So this is basically a resistance. If I draw a line, this is the resistance line and this was a support line. So again, this is the neckline. So if it is breaking the neckline here, then how much ever from support it went here, 5 rupees. Same thing down here, I breakout happened, then I confirmation. Okay, volumes are good of sellers. So I will go for what is that? Sell over here for 5 rupees. Okay. Remember again, it can touch this here only and it can go for a triple top also. Be very careful. There is many concepts like this. This is few example of candlestick patterns. If you learn these patterns, you will know you need to take action here. If you don't learn this, then if this formation comes, suddenly the price will fall, then you will wonder, why did the price fall? The thing is, you didn't know there is something called head and shoulder, there is something called double top, and there is called triple top, and many things like this which you don't know. So once you know these concepts, candlestick patterns, your price action is going to become more easy. So anyways, in the future, we'll be learning many concepts like these so that you will understand each concept step by step. Now coming to the stop loss. Stop loss is something which you have to concentrate in price action, because moreover you will be doing more of short-term trading. You'll be waiting, maybe today you got your profit, or maybe after 10 days you're getting a profit, or maybe after a month you're getting a profit. You need to keep a stop loss and a target in this price action. So in stop loss also there are different concepts which we'll be discussing later again, but I'll just give an overview. There are two kinds according to me. One is percentage stop loss and one is volatility stop loss. Percentage stop loss is nothing but, let's say a trader is ready to take 2% risk of his whole portfolio. Let's say 1 lakh is his money. So he is ready to take 2% risk on each trade. That is 2000 rupees risk. If 2000 comes loss, I will close my trade stop loss and I will not trade for the day. Okay, or a single trade, I will take only so much risk because it went wrong. Now in this type, I give an example here. Let's say a trader has 1 lakh rupees and another trader has 10 lakh rupees here. So 2% risk is 2000 rupees for him and 2% risk for him is around 20,000. I just take a general example. Now let's say both of them traded with same quantity. He traded with whole of his money 1 lakh. He traded only with 1 lakh rupees. He's not putting whole of his capital and taking risk. A 2000 rupees stop loss, if the 100 rupees price, okay, 1000 quantity shares, 100 rupees price, if it goes 2 rupees down, right, 2 rupees down, 98 rupees, 2000 rupees stop loss is hit. But in case of this person, it has to go 80 rupees for him to achieve 20,000, right? Because 20 rupees has to go into 1000 shares here. So it's going to be 20,000. So the waiting period, short-term trading waiting period for this person is higher compared to this person, which is lower. Let's say this stock, 100 rupees stocks volatility is 5 rupees or 6 rupees a day. He goes up and down because of the volatility in the stock. Too many people are trading in this stock. His stop loss will be hit very quickly. After hitting his stop loss, maybe the stock went up and gave 20 rupees upside. So his target of 20 rupees is booked. Whereas his stop loss of 2 rupees was hit very early. So here it doesn't depend in price action. What you want cannot happen. You are ready to take only 2000 loss. Market will not listen to you. You need to understand the market, what the market is showing you. So I would say volatility stop loss. Okay, what the market is showing, the chart is showing, that stop loss you can consider. So let's take an example of stop loss. So if your stop loss is less, okay, let's say you're taking a buy. Let's say you're buying a stock here and you're keeping a stop loss 2 rupees. According to your 2 rupees stop loss is here. It goes and because of the volatility, it hit your stop loss and you're out of the game. Okay, so you cannot say my stop loss is so much and I'm taking a trade based on price action. Price action told you to take an entry. Let's say price action told you to take an entry here and then you're keeping a stop loss immediately here. But price action is telling you support and resistance, the area where which the price is not breaking. For example, you're taking a buy here, then keeping something away from your support is far better than keeping 2 rupees, whereas the person is keeping 20 rupees. That doesn't make sense according to me. Okay, so what is the chart is showing? The chart is showing this is the movement of this stock. So for example, you're shorting. For example, you are shorting here, then your stop loss should be above the resistance so that it doesn't break. As in when your stock goes down, your stop loss is got below the resistance level. Okay, so maybe it's not broken. And finally, when the stock came down, you got your stop loss to this level. Finally, it broke. So you did a selling here, and your stop loss got hit here. You're still in profit, right? So you're trailing your stop loss. How did you trail your stop loss? Because you got to know that the price action is happening in this way. This is my resistance zone. So if it is breaking my resistance zone, I am over. The trend is going to change. So I'm giving up my trade. But whereas the 2 rupees guy, what will happen? Just because of the volatility, your stop loss got hit and you're out of the game. And later the stock went towards your direction and you will feel bad. So understand, if you follow the volatility and understand the chart and keep your stop losses based on the chart, what you see, what the market is saying, because different stock has a different story, like I told you. So as per the story, if you keep, it is more beneficial for you than keeping percentage. So in this case, the person A and the person B, the stop losses will be same for them. So you are acting according to the larger crowd. So also Bollinger Bands, Bollinger Bands go in this way with the center band, the price moves this way. So this also helps you to understand your volatility stop loss. So these is your like support line and this is like your resistance line. Also, you can use average true range ATR to know what is the average movement of a stock for the day, and you can keep that much below just to ensure that stock doesn't go so much down for that particular level. So just an example, these indicators also will help you to put volatility stop loss or your support and resistance. What you drew from your trend lines also will help you to understand what is your support, what is your stop loss. These are the few concepts which you can keep in mind. We will discuss in depth in later when in different scenarios. But these are the concepts which you can keep in your mind. Now talking about the target placing concept. So stop loss, you know, you need to keep stop loss, but same way target also should be kept. If you don't keep your target, then you will be trading and one day your stop loss will hit on all that. So according to me, you can keep target and price action in two ways. One is based on the previous data, you try to measure how much is the movement and then you keep a target, or else you can do a trailing stop loss like I showed you. As in when your stock price goes up or moves according to your direction, you can push the stop loss closer and closer and lock in your profit. So let's take an example here. Let's go for an example of this double top candlestick pattern. Now I told you here, this was a neckline, how much ever is the distance, I will try to take advantage. So this was your previous data on which breakout happened, you're going to take an action. Same way here, let's say the movements over here was 5 rupees, right? So once a breakout happened, you did a sell for 5 rupees over here. So this was your previous data which showed 5 rupees was the movement. So maybe 5 rupees or maybe 4 rupees is what you are going to book, because you know that was the movement which it gave previously. Also, if you see here, let's say you're looking to sell over here, you don't know how much to keep the target. Is previously from this level to this level, it has gone, let's say 5 rupees. Then from this level, when you short, you are expecting a 5 rupees fall, whereas it has achieved. Same way again, you're planning to short here, you're expecting a 5 rupees to fall because the previous data, right, the previous data showed you, and based on that you are trying to take advantage. So the last one is the trailing stop loss, which I showed you. As and when the stock goes down, you will be pushing your stop loss down and down. You can keep changing your stop loss and try to lock in your profit. So at least in case in a bad situation, if anything falls, you are locking in your profits and you are not losing any money, or you're reducing your loss. So trailing stop loss is an effective way to get the maximum benefit out of those movements, because certain movements will not stop, they tend to continue, the trend continues to go. There are few traders who hold on for 2 months, 3 months, because they trail their stop loss higher and higher, and they're locking in their profit every time. So trading stop loss will be more effective in terms of price action, because you have more time and you can wait. So that's more about this price action series. So the last tip what I would say is just practice, practice and practice. Keep practicing, because what you learned is just a theory. When you practice only, you master this type of method of price action, because you will become expert in drawing trend lines and understanding supports and understanding the demand and supply zones. From there you will know, okay, many are going to buy or sell, then you can take an action. You will know when to put your stop losses, how to book your targets, how to trail them, how to manage the risk. All this comes by practice. So slowly as and when you practice, you become more stronger in this particular method. It's not so easy like you think. As and when you do it, when you try to identify things, it becomes very easy. Initially it will become very difficult for you, but as and when the days goes on with these concepts, it will become more easy for you. So in this part one, I think this is more than enough for you to start off. Slowly based on this, I will do the part 2 for you guys, and then we will go in depth of each concept, because I spoke only candlestick overview, price patterns, or stop loss concept, or target, only overview I just went. So we will take one topic, one pattern, and discuss one video later part. First, you guys need to understand this basic and research a little bit more about it, so it will help us when we learn further. So if you like this video, please hit that like button and share this video with all the beginners. See you soon in my next video. Till then, take care. Bye bye.